Thank you. So let's just drop it in the chat box where we're dialing from, and on our names as well. So for today, my name is Femi Manuel. I am the accounting lead at BMAC Business Solution. I'm your host for today's webinar. Once again, thank you for joining this webinar, and we host these webinars like this every month, where we discuss important topics that pertains to businesses around the country. At BMAC, we are passionate about the growth and success of SMEs in Nigeria. Our mission is to help businesses to be more profitable and grow sustainably through our business management solution and the services that we offer. Our business management solutions include BMAC Cloud Accounting Solution. We have the inventory management software and the BMAC Invoicing Hub. All these are solutions. They are cloud-based solutions, softwares, which you can access anywhere you are all over the world. All these solutions were built to solve the financial management and inventory management challenges that your business might be experiencing and give you a better landing position. Today's webinar is all about tax. According to statistics, which you as a business owner can easily relate with, that 80% of businesses die before the 5th year of their existence, mainly because of tax issues, tax burdens, and several other issues. As a business owner, I'm pretty sure you will be able to relate with this issue. Unfortunately, we cannot stop paying tax everywhere in the world. Either you are in Nigeria, you are in Europe, you just have to pay tax. And that's part of our statutory obligations. But the only way to avoid the tax-related issue is to actually have a sound knowledge of it, or to engage a competent tax consultant like our firm. Referring to the recent monetary policy rollout by the Central Bank of Nigeria, in order to enhance the cashless policy initiated by the previous administration, a lot of small businesses will be exposed to tax because of this cashless policy. A lot of transfers will be taking place. So this will enable the tax authority to track all the activities of every businesses, and every businesses, if not all, like 90 or 99% will be exposed to tax. So peradventure, you have been able to avoid or evade tax in the past. The time has come that you need to have a better knowledge or to engage a sound consultant to be able to help you out so you can be able to avoid tax to the barest minimum. And that's why we have invited the best in the game in the tax to enlighten you and help you gain an in-depth understanding of the tax landscape in Nigeria, as well as how to properly plan for and navigate your way around about it. Because SME taxation is so wide, we have decided to break this into 3 sections. So the first section is what we'll be having this month, this December 2022. So the second section of this webinar, of this same webinar, will be coming up in January 2023, while the final section of it will be coming up in February or March of next year. But you can be rest assured that we will keep you in the know. Our speaker for today is Mr. Umin Anjorin. Mr. Umin currently works with SSCC Advisory and Professionals as the head of audit and tax, and he is a fellow of both Institute of Chartered Accountant of Nigeria, that's ICANN, and that of Chartered Institute of Taxation of Nigeria, that's CITN. He's also an associate member of Nigerian Institute of Management and Global Association of Forex Professionals. So you can see that we brought in a very sound and very competent speaker this afternoon that can actually shed a lot of light to tax issues experienced by businesses in Nigeria. So Mr. Wumi, you are welcome on board. So I can assure you that you enjoyed a bit of every bit of this webinar. So housekeeping, as you are dialing in, please just try to mute your mic very quickly. So I'll invite the speaker to the floor. Let's all ensure that we mute our mics and videos are turned off. This is so that we are able to get the best experience of this webinar. If we need to pass any comments at any point, let us kindly drop it in our chat box. If you look at your screen now, you will see what you need to do to be at the best time. Just limit the distraction, to be prepared, presentation, meet yourself. Participate, you just have to raise your hand. And peradventure you have any information to pass across, just kindly drop it in the chat box. And if you want to speak, please, peradventure, when you get to the question and answer section, you have to speak clearly. So let's hear you out. And you have to show some level of respect as well. So you are welcome on board, Mr. Wumi. Thank you very much. The floor is yours, sir.
Mr. Femi, for the brief introduction. As he said, we shall be looking today
hello, sir. Can you hear me?
on the understanding. I can hear you. But can you hear me?
Yes, I can hear you. Can go on, sir.
Okay. So thank you so much, ladies and gentlemen, for this brilliant introduction. I've been looking at that aspect of business generally, and with specific attention, put on SMEs, prospect that you have in incubate technologies and all these various products. This is just to help the small businesses to grow, and the bigger one too, to keep.
So Femi, I think the speaker is having a bit of network issues. So
yes, to keep doing in business. Are you hearing me?
Yes, you can proceed, sir.
I think it's better.
It's better now.
Can you hear?
Yeah, you can proceed. It's better.
Yes. Yes. So thank you, Femi, once again. And like yes, rightly introduced, we shall be looking today in the series of webinars that have been, going on from this end, that is incubate technologies. They have spoken variously on the aspect of businesses. So we shall be looking today on the tax aspect of MSMEs, both small, medium, and even large companies, but with the emphasis on MSMEs. My name is Umi Anjorin. I presently hold on the desk of audit and tax for SSAC advisory and professionals, a reputable company in Nigeria in the service of providing solutions to businesses as well as helping and assisting businesses to grow and make maximum return in their investment, and also making sure that things work well and are okay with all business owners. So once again, thank you, and we shall be going through into the main dish of today, and that is on the issue of tax and its implication to all taxpayers, especially MSMEs. So let's see the introduction of what we have got to do. A 2017 survey by Nigerian Bureau of Statistics said that SMEs are about 41.5% and the country generally, and that majority of these companies are small and medium, such that they showed as an engine room for growth. And according to PwC, SMEs in Nigeria account for 90% of businesses, the GDP. Many SMEs
All right, we can see your screen, sir.
Yes. Okay, I can continue. Thank you. They found that 8% of small businesses are not inside that one. They may not know their part, but the essence of this webinar is to showcase the importance of taxes and its implication on businesses, and that it is not meant as a punitive measure, but to assist both the business owner and the government to earn maximally on the overall good of everybody. Many SMEs fail in this obligation primarily as a lack of knowledge and the fact that they do not keep proper books of account, like tax assessment and tax planning. Like I said, they may do that maybe as a result of little or no knowledge at all. But with this today's seminar and the subsequent one that will come, we will now be introduced to how easy it is to be tax compliant, so that you can ensure that your business grows and the right thing is done at the right time. Both the government and sorry for the little interruption. It was due to the internet going up and down, but I think that it fixed now. So sorry once again, let me quickly go over the intro so as to not to waste much of our time. So I said the 2017 National Survey showed that through BMAC that small scale industry, that the SMEs are about 41.5%, 41.5 million, in Nigeria, and that the issue of taxes and its obligation is, as a result of maybe partial knowledge or no knowledge at all, on the part of SMEs owners, and that was why they are failing, in their obligation to pay adequate taxes. Now, what is tax knowledge? Tax knowledge is defined as the level of awareness or consciousness of taxpayers about tax legislation, because basically taxes is about law and provisions. And when there is anybody that breaches it, I mean, there are penalties and what have you. But as long as you follow, according to Utano 2021, we define it as a level of awareness or consciousness of taxpayers about tax legislation, including process of tax and tax-related information. We've spoken much earlier through their various records and books to let us know that knowledge is power. That knowledge is power, and everybody should be knowledgeable in whatever thing we are doing. So the purpose of this webinar, for example, is to give some knowledge about taxation, especially to SMEs in particular, and general businesses in general. Briefly explain that the relevant laws and how to obey the tax through tax planning, practice tax compliance and avoidance, and thus prevent tax evasion, which is criminal in nature, and which is a disobedience of the tax laws. Like the intro person just said earlier, the topic we should be looking at under tax is divided into 3 webinar papers. One, today we are looking at company income tax, CIT, and value-added tax. So the other 2 will come up much later, early next year, where we are going to look at personal income tax and what have you. And those in the series will be on tax planning, which is even the most important thing. But today we have guide us to give a broader knowledge about taxes and how to apply it for our own benefit and for the benefit of even the government too. The Nigerian tax system, let's consider that. The Nigerian tax system undergoes regular and continuous updates aimed at repealing obsolete provisions, simplifying them and bringing them to current realities of technology, economy, and general society. Yes, the tax system is very dynamic because the society itself is not static. And for the government to have maximum return, and also the taxpayers to make sure that they manage their taxes in such a way that they are not too much inconvenient in paying, so as not to have any direct impact in their business. So that is why the provision of the law, guiding tax is always being reviewed over and over. As we will see much later, we have amendment to various taxes that have been in existence for a long time through Financial Amendment Act of 2019, 2020, and 2021. The importance of tax, therefore, cannot be overemphasized, as most transactions cannot be done without the various MDAs, ministries, departments, and agencies asking that whoever is going to have any dealings with them should present his or her tax clearance certificate just to show that the taxpayer or the person seeking one favor or the other from government is actually tax compliant. And with that, the issuing agency like this MDAs will have no choice but to listen and act accordingly. Now, next to see for ourselves and for the purpose of this knowledge acquisition is a list of accrued taxes and levies for the 3 types of government. As you know, we have both federal, state, and local government that make up the federation. And each of these federating units, that is from the federal government, has a line of action as far as taxes is concerned. We consider that fully today, And subsequently, we look at the other types of levies of, the other types of taxes that are equally, of benefit to both the state as well as the local government. But let us consider that of federal, which is most important and that directly affects an SME, because SME is a registered business under the agency of government, which is Corporate Affairs Commission, and through that, FRS is one, company income tax, CIT, which we are considering today. We're talking tax, which we are also looking at today. Personal profit tax is also tax collectible by them, but that is to serve for another day. Value-added tax is also a good source of revenue for government, is to be considered. The education tax, capital gains, and what have you. These are the major taxes that is administered by FRS on behalf of the federal government, and they are the focus of our attention on SME businesses as well as general business owners. The CIT proper. CIT is governed by Companies Income Tax Act, CITA. Yeah, and it's governed by CITA through the Law of Federation of Nigeria 2014 as amended by Company Income Tax Amendment Act 2007, and equally, affected through the Federal Finance Act of 2020. Is payable by companies. Once you are a registered company, like I said, by CAC, you are bound to be tax compliant because all your details are, as you are being registered, your details is being passed on to the Federal Inland Revenue as long as you are a registered company under CAC. And that is significant economic presence, that is FCP in Nigeria, that is for all businesses. We have Nigerian registered businesses and non-registered companies, but as long as a non-physically present company can have presence in the country, it's also subject to the tax administered by FRS. So before we go further, I want to give a kind of a live example of how to assess, how to look at a small business owner and the effect of tax, and how such a business owner would navigate the waters of tax, so as not to have any issue that would probably be impacted negatively on it. So we consider Omoluabi Great Limited, OGL, so as to express today's discussion and to drive home our points. So let us walk through the law, process and practice through the eye of Omoluabi Great. We've got the issue around OGL as follows. Rates of taxes that are applicable to all businesses, SMEs, inclusive. Exempted profits of small businesses, companies with annual gross turnover of 25 million or less. For SMEs who are doing annual turnover of less than 25 million, the payment of CIT, payment of company income tax, is actually not for you. You are protected by law to still encourage growth and stabilize, so that you can even move ahead from that particular threshold of 25 million. So in a way, if you make 25 million or less, if you make 25 million or less, you are not expected to pay any tax at all. Okay. For those who are making 25 million but less than 100 million, the CIT rate that is applicable through the various amendments to the CIT law as well as the Finance Act are set to bring it down from the maximum amount of 30% to 20%. Note, those who have less than 25 million are tax exempt completely. Those who are making 25 to 100, they are expected to pay 20% on the actual gross turnover they made during the year, while the 30% standard and the highest rate ever is for large companies, which are supposed to be 30% of whatever they are able to make. In the time being, we want to take a poll of the participants. Kindly hold on.
Okay, good afternoon, everybody. So we just sent a poll. Please let us engage with this. It's just a short break for us to know if you are like following the lecture and the discussion. Just for we have less than 30 seconds now, so let's just engage this poll. And as people are just coming in, please you can. Drop the invitation in the chat box. Let us know where you are dialing from, and we would welcome you, just for us to know like our reach and know we can see people dialing in from Lagos, from Kwara, and so on. So just name and where you are dialing in from. If you have questions, with the lecture so far, please drop them in the chat box, and we would work on it and we'll answer those questions when it's time for question and answer. Thank you very much. So I'm going to be landing this off in 10 seconds. Thank you, guys. All right, I'm going to be rounding this off. Thank you for answering it. I'm going to and stand So, like, if you can hear me, Mr. Anjani, I can't hear you. Can you unmute your mic? You are muted at the moment. Okay, so we're having difficulties with the speaker's microphone. Femi, are you there? Femi, can you hear me?
Sorry for the short interruption. It was due to internet connection, but I think we are okay now. Just like I was saying, we are using typical example of Omoluabi the Great Limited, just to drive home the point about taxes and how it affects an SME. So let us walk you through it to see the process of what we're talking about. Yes, for small businesses like Omoluabi the Great, if, for example, Omoluabi is making less than 25 million as turnover in the year, the Development Tax Law and its amendments exempt Omoluabi not to pay tax at all. So for those SMEs who are in that category, who makes 25 million and below, or below 25 million in a year, they have nothing to worry about other than to continue to do their business and pray that they probably will grow much more better. So the next line of tax payable by companies using again Omoluabi, for example, assuming in the following year, Omoluabi makes a turnover of about 26 million to 99 million. So the law allows it to be assessed to tax on just 20% of the taxable profits as against the maximum, because it is still an SME. Whereas, assuming Omoluabi has grown in such a way that is now in the league of big time players in the type of business that Omoluabi is doing, the tax rate that is applicable is 30%, which is the highest ever for such businesses to be assessed to tax. And that is the maximum amount that is expected to be paid to FRS as a limited liability company. Yes, Omoluabi the Great is liable to tax on its worldwide income, being its profits accrued in, derived from, or brought into, or received in Nigeria. Since Omoluabi is a registered company, as the name implies, in Nigeria, it carries on its businesses and what have you, so it is accessible to tax under Section 9 and subsection 13. Now, whereas if a non-resident company, which is an NRC, but has significant economic presence in the country, such a company is also, accessible to tax. The Finance Act of 2019 and a ministerial order introduced the concept of significant economic presence. One, for a registered company that is domiciled in Nigeria, these are what the tax says it's applicable to them. But for other companies, which we also mentioned in the course of the lecture, but they must have significant economic presence, they are also taxable according to the Finance Act of 2019. Yes, we should really consider for SMEs and even larger businesses, the latest policy statement made by the Central Bank of Nigeria in its monetary policy, with the effect from 9th of next month, 9th of January, the amount of cash that is allowable to be withdrawn over the counter every day for individual as well as businesses. Since we are considering businesses now, we have to limit it to the business aspect. And when it's time for the individual taxes, we shall consider the implication on that. So the implication of that is the bank transaction of SMEs will be, will be higher, because as buyers cannot, hold more than 20,000 per day, and the application of the funds available is a function of what they wanted to do. But with bank transactions, SME businesses is expected that will be on the increase. Yes. Through the BVA and the tax identification number issued by both CAC, that is Corporate Affairs Commission, as well as the tax office, there's nowhere any business could try to hide anymore with the introduction of that policy, which comes coming to being with the effect from 9th of January 2022. Businesses will be more feasible, and that to track by FRS will not be a problem at all. So those are the issues that should probably, inform the decision of SMEs, especially from Oluwabi Nigeria Limited, that we are considering as a business unit and business owner that others to fall into. Now, incorporated companies we pay CIT, just like I said, on 25 million turnover and above, as well as paying 100 million turnover at 30%, which has already been explained. Education tax is also a burden, but for businesses like Omoluabi, who is making less than 25 million, is also exempted from paying the 2.5 million education tax. In fact, it is more or less reserved for the big players. Yeah, still on the implication of cash withdrawal, individual with income above 30% per month will be assessed to tax on the graduated tax of 7% to 24%. That is what we are saying is, even if you earn as low as that, instead of you being subject to the tax table of 7 to 24, it's only 1% of your earning as somebody who earns 30,000 naira per month as an average wage. All in all, more people will be pulled into the tax net. So there's no more hidden places for any taxable person, be it individual or businesses, especially the SMEs. There's no way you will not be made to pay as long as you continue to be in business. Then the basis of assessment. Basis of assessment is the way the tax authorities assesses any taxpayer, and this is usually on the preceding year basis, because the year as this current year 2022, for example, in case of Omoluabi, the year has not ended. There's nothing Omoluabi, for example, can do or can pay until the year runs out. That is why assessment is always based on preceding year basis. That is what you are able to do the year before that will be assessed in the current year. That is the essence. For example, if Omoluabi the Great makes its account to 31st December each year in the 2021 tax year, which will be based on 2020 account, it will be assessed to tax on the profit computed for the accounting year ended in 2020. Why deemed revenue, that is okay, deemed revenue is the method adopted by FRS to assess companies whose information is not convincing enough, or which the FRS believe that they have something to hide, by taking every percentage of their income at 20%, to be the turnover, and at the end of the month, aggregate it all and apply the maximum tax payable. But in this weapon, more or less, is hardly being used, because in fact small businesses cannot even come into this. It is especially targeted at non-resident companies that have SEPs who do not have adequate records that can be followed. So FRS hardly use the deemed revenue method to assess companies. Then on the minimum tax, in order that every taxable person, especially businesses, both small, medium, and even large companies, are made to pay, because money generated is used for the good of everybody. And it doesn't matter that the money I paid as a taxpayer, for example, the Omoluabi, the money must be used specifically for this. No, taxes are paid into a pool, like insurance, into a pool of funds, and government will just dip its hand and make use of whatever amount they needed for the general good of everybody, without the cost to who has contributed it. So the minimum tax that is payable, as according to section 14(16)(3), subsection 1 and 2, is that 0.5% of the gross turnover is taken out in frank investment income that has suffered initial withholding tax or deduction ab initio. So the gross turnover means the gross inflow of economic benefits during the period arising in the course of operating in the country. Yeah, a company could be exempted from minimum tax payments if it has a gross turnover of less than 25 million, just like the normal SMEs in the relevant year of assessment, and it carries on primarily agricultural trade or business. Those are the two areas the minimum tax could not even be applied to an SME. For example, the Omoluabi degrade that we are considering. And filing requirements. To every law, there's a rule that it must be followed and followed to the letter. The filing requirement is also expressly stated under section 56 of section 1 and section 55. For a business to file its return with inland revenue on the preceding year basis, like on the issue of assessment that was discussed earlier, the following document must be submitted along with that intention to do. That is audited account of Omoluabi, for example, prepared by a certified chartered accountant in practice and stamped as correct. Tax computation, must accompany the audited financial statement, as well as an accompanying letter to FRS. But for companies that are doing 25 million, assuming Omoluabi again come into 4, assuming Omoluabi is doing less than 25 million, the law permits it not to even get its account audited. But that is on the one hand. There's no way the file will be done at the FRS without an to audit their accounts because of the level of turnover, which is 25 million they are making. But it's just for general knowledge and to let us know which can be argued in order to save enough money by the Omoluabi of this world. Then due date for filing. Due date for filing, the law requires that within 6 months at the end of the financial year, a filing of the previous year's account must be done in the current year. But for a newly incorporated company, assuming Omoluabi is just newly incorporated, the law allows it 18 good months to be on its own, do whatever it can do before turning in its first set of accounts. Or even choosing an accounting year end, the law also says 6 months after you have done that, Omoluabi, please turn in your tax papers for scrutiny, whichever is earlier between the two. We now consider due date for payment of CIT. Once an assessment has been raised, be it self-assessment, assuming that Omoluabi is self-assessing itself and returning it, that is making 25 million and above, below 100 million, and it should be assessed to tax at 20%. So within 6 months, of filing, then the payment due must be paid within 3 months. In fact, the law even requires that the payment be made immediately the filing is being done. Then, if Omoluabi is doing more than 25,000, it will also be subject to education tax of 2% that I mentioned earlier on. But below that is exempted. Whereas if taxes due are paid within the next 3 months by each of these companies, including Omoluabi and Co. So for medium-sized companies, that is 26 million up to 100 million. The bonus FRS will be given will be 2% to the medium-sized company. Whereas for big players, the bonus, for payment of the taxes due on time within the space of 90 days is 1% that can be used as tax offset or tax credit for future and subsequent payments. Then the offenses and penalties for not filing. Not filing, FRS frown at it very much. And that's why they gave 6 months, that at the end of the year, you have 6 months to prepare. But failing to do that, with effect from July, which is the beginning of the 7th month, then the penalty starts for existing businesses, such as Omoluabi, for example. If the company fails to turn in its return, Omoluabi fails to turn in its return by the end of June. So from July, it is expected that it will be penalized. And the first month, the amount for the first month is 25,000, and subsequent months it will be 5,000 addition that will be put on it until the filing is completed. And for officers responsible for this failure, the penalty for such a person is 100,000 naira, or 2 years imprisonment, or even both. Penalty for late payment is 10%. So in order to avoid all these penalties, it is better that each SMEs, for example, Omoluabi, the great, as well as similar companies in it, get in touch with seasoned tax consultants to help them manage their records, manage their books. This one will be discussed fully under tax planning. But it is always better before it is too late, so that the excess penalty will not be applied to such a company and to Omoluabi, for example. So there was even a policy statement, like a memo from the Ministry of Federal Minister for Finance, that said there should be a spread, because the penalty and interest is always based on the CBN monetary policy rate of 14.5% plus a spread of 5, which makes it 19. Then for incorrect return, which is frowned at as not being good at all, the penalty and interest are accrued, and the interest payment will be total. So the status of limitation. What this one is saying in essence is tax authority may issue additional assessments within 6 years from the relevant tax year. They have the right, they are backed by law to issue additional assessments within that 6 years, and that it must be used, must be paid, that there's no way it could be avoided. However, the limitation of status of the status of limitation, is not applicable to companies. For example, if Omoluabi willfully, something incorrect, or do not something correct at all, or doing that willfully and to hide some fraudulent activities or a neglect. So there's no status bar. They can issue assessment and penalty for as long as the FRS fails. Then on the issue of notices of assessment, before the present regime, what normally obtains is a physical copy must be filed on the taxpayer. For instance, for Omoluabi, if it fails to do any of this, a physical copy must be filed stamped at the recipient company. But with the introduction of a Finance Act 2019-2020 and up to 2021, other means has also been added, and it is assumed that it is the correct way to go. So they can serve you through courier service. It can even be through email or any other electronic means. The purpose of taking notice of assessment and as initiated under Section 68 and 69 of the CIT Act. Then, on capital allowances are like reliefs granted to companies. For instance, Omoluabi, there are assets any business venture is expected to have, like furniture, like motor vehicle, like plant and machinery, even owns a house or building. So because the various accounting policies of companies or businesses differ, that is why FRA come up with a standard and uniform rate that is called capital allowance on all these qualifying expenditure, from non-building, from building, industrial and non-industrial, to even software. You have the rate for initial as well as annual, that is a relief as against the depreciation figure each company is charging. So the depreciation figure, because of non-uniformity by various taxpayers, is always added back to their net profit. And a uniform amount for all types of business using the various assets is allowed. And upon that, a tax payable is derived. That is the rate for both initial and annual for all the classes of assets. Investment allowance is another good way to go for businesses who invested in not only physical assets, but in areas where there are no facilities at all. Like establishing a business, Omoluabi now decided not to stay in the metropolitan area, but goes to the village to set up businesses where there is no facility at all, no electricity, no water, and no third road. Those are additional relief, additional grants, given to such companies, just like pioneer companies, in a way to have, a leeway for stability before they now join the league of taxpayers. Of late, precisely July this year, there was a circular from FRS saying that all companies, regardless of status, as long as you are enjoying what was just discussed, which is capital allowance, which is generally given, there's this existing law that has been neglected for a while, but which has now been dusted and brought up. And that is every company must get what we call acceptance certificate from Federal Ministry of Industry for assets of 500,000 naira and above. The most important thing even to know there is there's no exception. All registered companies must fall into this category. And the year they are even looking at is 2016 to 2021 and above. So in here, a reputable tax consultancy firm, just like MESA, can be of tremendous advantage and tremendous use. We are always available to assist taxpayer, both potential and existing one, to get this particular document from Federal Ministry of Industry for submission. Actually, the last date for submission is October, but as long as you are able to present it, the capital allowance granted will still be allowed to stay. Otherwise, it will be withdrawn and additional amount will be assessed to you and start to be paid for enjoying what you should not have enjoyed in the first instance. On the case and issue of minimum tax for companies that have been in business for less than 4 years, it is not applicable to them. That minimum tax of 0.5%, it is not applicable to them at all. Then for companies that have been making, losses, fail to send in return, those are the companies that are assessed equally on minimum tax. Now we now consider withholding tax issues. Withholding tax, as we all know, every businesses, both small and big, Omoluabi the Great, for example, is transacting businesses with third parties, either buying services or goods or what have you from them, and also paying others too, and other people, paying depending on what and what it does. So the withholding tax is a tax that is, applied on all taxpayers, and it is deducted as source. We will consider various rates at the appropriate time, so that the tax, paid by each taxpayer is set aside pending the time the return will be, brought in, and it will be used in offsetting the actual tax liability from what has been paid. And if they are overpaid based on the returns, they have what we call tax credit that will get to the advantage of the taxpayer, using a model that we have been talking about over time. So withholding tax is a method used to collect income tax in advance. It is deducted at varying rates of 5% for individual and 10% for corporate organizations. It's a tax payment made in advance. Then these are the rates of withholding taxes that is applicable to companies and individuals. The highest rate is 10%, while the least rate is 2.5. The highest is 10. 10% usually to federal inland revenue, and the majority of 5% that relates to individual is to state internal revenue services. The VAT. Value-added tax is a consumption tax, and it is usually borne by the last person, consuming the service or the product. It's another way introduced by government that revenue will be, made accruable to the government, and it is, stated in the VAT Act, V1, Law of Federation of Nigeria, 2004, as amended. That is a consumption tax, like I said, paid when goods are purchased and services are rendered. It is a multi-state tax that is borne by the final consumer. So all these are the applications and what is applicable to VAT payment. Recently, from 2019, precisely through the 2019 Finance Act, it has been changed. Usually, it's 5%, from 2009 that it has been on. The VAT charge rate is 7.5% going forward. So you have both input and output, and this thing is done on monthly basis. Every VAT return must come in 21 days after the previous month, because it is a consumption tax that is accruable on monthly basis, and the filing of it must be latest by 21st day of the following month. You have taxable supply that have taken place. The taxable supply is deemed to have taken place where, one, goods are physically present in Nigeria. Those are the goods and services that are taxable. The beneficial owner is a taxable person, and the right over the goods is accessible in Nigeria. Services are rendered in Nigeria by a person physically present, on. Then the right is connected to an immovable asset also in Nigeria. So those are the kind of assets, those are the kind of services or goods that are taxable, which once it happens, tax due on it must be taken. There are 2 or 3 types of taxes on VAT. We have input, we have output. So the difference between the two is what is returned. The one you pay when you enjoy services or goods is your input. Whereas the one received by you from what others do for you is your output, and you put the two together and pay the difference to the authority. Registration under Section 8 of Section 10. Once a business is registered, like Omoluabi, for example, assuming it's a new company, once it is registered, a team is generated by the CAC and forwarded to FRS for proper monitoring and tracking. And the letter of VAT, just as discussed, will be issued by the new tax office that is closest to the business place of operation. Whereas NRC companies too, they are also taxable, even though they are not physically present. They are of special economic benefits. Companies with taxable supply below 25 million in a calendar year are also exempted. So for those SMEs, like the Omoluabi of this world and the like, that are making 25 million and below, there are so many exceptions for them, and they can continue to be in business and aim to grow much, bigger and fatter, so that they can be in the group of taxpayers. Yes, of late, only yesterday, there was a policy statement from by the CBN on the issue of cash withdrawal limit. This will aid businesses to grow, no doubt, and everything will be monitored, will be tracked, through the BVN, just like I explained much earlier, so that with limitation of excess cash in hand, the use of electronic as well as digital and other means of communication will increase, and this will give visibility, to various businesses, that will be no more hidden places for business owners. So, gentlemen and ladies, for those of us who have questions to ask, you can please drop your question in the chat box, so that we'll be able to, handle them as we get there. Conclusion and call to action. It is absolutely important that every business, particularly SMEs, keep proper records using BMAC accounting systems in order to make tax returns, assessment, and payments seamless. We encourage you that you engage the service of a tax consultant like MESAC to ensure that they maintain tax compliance and not to suffer unnecessary harassment by the taxman or face exorbitant tax assessment. MESAC is there to assist business owners, I'm already of this soil and water, to assist them, protect them, and give quality advice as how to handle their various tax issues, so that at the end of it all, they will be happy, they are compliant, their tax clearance certificate will be issued on time, and they'll be able to do more business in the years to come. Thank you. It's time for question and answer, if you are ready.
Okay, thank you very much, Mr. Anjari, for giving us that insightful session. I know we are still going to continue after this, but I just want to right. So like I'm sure that some of us here have tax questions or concerns or areas of concerns or clarifications, right, about tax and business, right? So we can post our questions in the chat box, and if you like to speak, then let us know. We'll unmute you and we'll ask your question. Right. So I think someone trying to ask a question. Oh, Ju. Okay, let me try to unmute you. Okay, Uju, can you unmute yourself? I just give you access to.
Good evening, sir.
Hi, good evening. Thank you for dialing in. Where are you dialing in from?
I'm calling from Onitsha.
From?
Onitsha, Anambra State.
Oh, wonderful. Thank you very much. So what's your question?
There's a product I offer to my clients, and that product is to keep records, bookkeeping records for them. And I wanted to find out if one decides to solicit for this BMAC accounting software, is it designed in such a way that you can use it to keep accounts for several clients? Is it workable that way?
Okay, thank you for that question. Well, yeah, BMAC is designed to keep tabs on different businesses. Right. Account. You as a freelancer, like an accountant, right? You can
Yes.
have different businesses with BMAC accounting.
Is it just, assuming now I ask you to install it for me, will it just be for my own business alone? Or can it be installed in such a way that I will have its invariant that I can use it to keep accounting books for Mr. A and Mr. B and Mr. C and Mr. D?
Yes.
And I'll still get
yes.
what I want.
Yeah. Yes. You can records for Mr. A, Mr. B, Mr. C in BMAC accounting.
Hello, Siri. Steve, can I come in?
Yes, please do if you.
Hello, we got
All right.
there.
Okay, I guess you're an accountant.
Yes.
Okay, what happened is this. This is how BMAC works. For each of your clients, you need to get a license for them. Then you will be rated to each of their accounts as their professional. So you have access to all their accounts and be able to log on anywhere you are and do the needful. So you don't need to visit any clients before you get their books. And at the same time, there is a module on that BMAC accounting, which you call Notebook, and we have Notebook Plus as well. So that one does not require the knowledge of debit and credits. So your clients can easily make use of it to pass information to you. So you can be able to interact easily with your clients using that module, that which you call Notebook app is on a BMAC accounting. But what you need to do is to be collaborated to the accounts and be able to give them the necessary reports as at when due.
Okay, what you are saying now is that I have to get to their company, install the software for them, and they will do it themselves, and I'll be assessing it. Is that?
No. You are the one that will prepare the books for them. Okay, what happened is this: that book that they are using at that time, the postings are not entering the ledger at all. You are the one that will check and do the postings.
Look at the kind of clients we have.
Okay.
They don't even want to get associated with that posting or that keeping of books, whatever. What we do is on every week or on 2 week basis, based on the volume of the transaction each client have, we go to their offices. They just keep their notebooks. If they buy fuel, they'll write fuel, 10 naira, this one. At the end of the week, you will come, pick all those details, go back to your office. Then we are using manual now. That's why I wanted to see if we can get this software, install it in our own office, in our different computers, and then be doing that posting ourselves as if we're working in the office, because they don't even get.
You can do it. As I mentioned earlier on, that is cloud-based. You don't even need installation really. All you need is your internet and the device that is connected to internet. So you will get license for each of these, your clients. They'll be signed up with their email. Just be collaborated, and you have access. They don't even need to do anything. They don't even need to relate with any computer, any system. You just get the book.
This one you are saying I'll be getting license for all of them. So if there are 10, I'll get 10 licenses. Is that? Can't be too costly now.
Yeah.
No, I don't even know how much it costs. So okay, the one of we'll discuss about the pricing later, so that I won't disturb your meeting.
Okay, you can drop your contacts so we can follow up with you, but I can assure you that it's it's pocket friendly.
Okay, I have sent my email on that chat.
Okay, thank you.
Israel, thank you very much.
Thank you very much, Drew. I was just about to say that you can drop your details so that we can give a quick demo on how the product works and see how we can tailor it to your.
Okay. I will send another. I'll drop my phone number too.
All right, thank you very much, Drew. We have somebody raising his hands again, Mr. Ikechukwu. So I'm just this is just like for 2 minutes. I'm going to unmute you for 2 minutes so you can ask a question while we move on. Mr. Kichuku, you can unmute yourself.
Okay. So my name is Ike Chukwu. I want to thank Mr. Anjorin for the insights he provided. Okay, since I have just 2 minutes, let me ask a question right away. He talked about the acceptance certificate required by FIRS, and he stated that is required for qualifying capital expenditure of 500,000 and above. Okay, my question is that value, is it per asset or is it the total qualifying capital expenditure incurred by the company for the accounting year? Thank you very much.
Yeah. Thank you, Mr. Ogugufo.
Yes, sir.
It's per an asset. Capital allowance is granted per each asset. And to make it easier, that is why they come up with that threshold value, because they can't expect you to get to get a acceptance certificate for an item, even though capital nature of 10,500, 20,000, 30,000, but something of $500,000 range per each asset. It's not the total, it's per asset.
Oh, okay. Oh, great. Okay, so does it mean that the acceptance certificate is per asset, is not for a whole year for a company? You are getting one certificate.
Yes, for each accessible year,
yes, sir,
that capital allowance granted, they just want to make sure, they want to be sure that what they are granting you, giving you, is actually what you deserve on each class of asset you have. So it is it is asset per asset, and as long as the value is over 500,000, because they have already granted you the relief upon which, before you have your taxable income, but where you cannot provide this and the value is more than that, they are at liberty to write it back and give you additional assessment.
Okay, I just want to be quite clear on this. That means if you buy qualifying capital expenditure of 400,000 in 10 places, you have 4 million for that year. Because none of them is up to 500,000, you don't need to seek this certificate of acceptance.
As far as that policy statement is concerned, you don't.
I want to believe that there's confusion on this because we sought clarification from FIRS. They don't seem to be very certain on this. We reverted to Federal Ministry of Industry, Trade and Investment, and they say there is the total expenditure incurred by the company in that year. In other words, even if it is 50,000, so long as when you aggregate them, is up to 500,000, you need to seek this. I don't know the best way to get this sorted out. And again, there are a lot of bottlenecks in that ministry. When you submit your returns, the next thing is, okay, so this is the value of the total expenditure. How much are you paying us and all of that? I don't know if we know about this and what could be done to get around this.
Yes. Thank you, Mr. Bugafo. There is a lacuna in there because the policy statement is not clear. But as far as that issue is concerned, if you look at their circular, it's 500,000 per asset. That is one. There's no controversy about that. What if you have different classes of assets that give you the total value of 5 million and they are not the same, assuming it is plant and machine?
Yes.
But, and total capital expenditure for that year is 5 million for total assets. So how do you now distinguish between A and B if you do not go through the route of one by one? So it's a thing that one could easily take up with the Federal Ministry of Industries or FRS per se, because it will not be easy to just aggregate all, even with lesser values. To me, and as far as that statement is concerned, it is per asset. Then as for the issue of what is in there for me, it's a pity I don't have a direct answer to that, other than once you need to find its way, I'll probably go over and above that particular officer that is requesting or demanding for that.
It's okay. Thank you so much, sir.
Thank you very much. Thank you very much, sir. So, Mr. Anjorin, I just want you to round up discussion.
So kindly unmute yourself.
So sorry, I was saying that can we like have the summary or roundup of the presentation in 10 minutes so we can take the rest of the questions. So those people asking about the presentation and the recording, we would have this sent after this webinar. You have the recording of this webinar and the presentation slides, and we also have a way you can reach out to us if you need help in your tax consulting and your business and everything that has to do with tax. So, Mr. Andre, in the next 10 minutes, can we try to give a summary about this discussion? We have loads of questions that we need to answer, so we can touch those questions and round up this session. Thank you very much, sir. Thank you, Mr. Ikechukwu, for that question. Over to you, sir, Mr. Andre.
Yes. We will look into the various questions and try to answer them as quickly as possible. And if they are similar, we could match questions together and then give some solution or reply to them.
Okay, so
yes.
Okay, so I'm just going to create the questions, right? I'm going to be asking the questions one after the other, so we can be organized about it and be fast about it. So someone asked a question, so I have a list of the questions, right? It says, so if I make less than 25 million, I don't pay any tax?
Yes.
So yes, the person doesn't pay or he pays the tax.
Yes, the laws allows you an exemption, especially you're in the category of an SME. If you make a turnover less than 25 million, you are exempted, completely exempted.
Okay, sir. Thank you very much, sir. The next question said, also, if I make a profit of 5% on 25 million and turn it around 4 times in a year, how will my tax be calculated?
Yes, your income, like you said, the profit made is 5% of 25 million 4 times. You look at what the figure is, 5% of 25 million. That will form the basis of your performance in the year under review. And as long as that figure is less than 25 million, because when you say you make a profit of 5% on 25 million, that is profit after expenses or what have you have been done. But the major issue, my dear brother, is that as long as it is below 25 million, you are tax exempt. You are not to pay. You are tax exempt. Except it is more than that.
Okay, sir. Thank you very much for that. The third question, how will the inputs and outputs of VAT net offset? How is the inputs and outputs VAT net offset?
Exactly. On the Tax Pro Max, if you go onto the Tax Pro Max, that's the software, you have various headings that shows taxes, VAT paid on goods and services, you yourself consume, you pay it to somebody, it will be noted. And the ones other people pay you also be noted. So it is the difference between the two, both input and output, that now form what is paid to the tax authority. Because what you have paid, you have gotten it back. So it's like in and out. So what is now left is what is the reservoir that either fall onto you or fall onto somebody else through you. So that is how it was. It is, properly stated under the tax promise, under the VAT section of it, both input and output VAT, and the difference is always also stated there. So, and it is on that you have now apply your 7.5% of the total volume of the difference between your input and output VAT, and you make the returns to FRS as appropriate, latest by 21st of the following month.
Thank you very much, sir. So I have another question here, but I think I will discuss that. I'll talk about that briefly because we still have a session that we'll talk about. So what is BMAC accounting system, please? So the BMAC accounting system is a cloud-based accounting system that helps you to track and manage your business from anywhere in the world, right? So we have built a solution that can give you your reports, right? Exactly when you need them in terms of your trial balance, profit and loss. It basically is what you need for the accounting of your business, right? And it's a very robust system, and we have clients that enjoy this system, right? And we are still going to talk about it briefly, play a short video about it, but I just gave that as a brief explanation about what BMAC accounting is. And I have the next question. He said, who does partnership business? Okay, who does partnership business? Who does partnership business and sole proprietor business remit PET and CIT to?
It's simple. The two categories of taxpayer remit to Federal Inland Revenue, because it's only Federal Inland Revenue that administers both the CIT and VAT. It's only withholding tax that is split between the two organizations, both FRS and State Internal Revenue Services. So in this particular instance, it is the FRS that a taxpayer that has to remit on these two taxes, has to send his returns to. It is the FRS.
Okay, sir. Thank you very much for that. Moving on. So can a consultant use BMAC accounting system to keep accounts books on behalf of their clients? Yes, and yes. A consultant can use the BMAC accounting to service their clients. And fortunately, we have a program called the BMAC Partner Program, right? Which is a community of professionals, community of business professionals. And our clients, our partners use BMAC accounting to service other business. And not only that, they earn income from using BMAC accounting, right? So this is something that, Tim, can you please paste the websites and the links of the BMAC Partner Program? If you're an accountant or a professional and you have clients that want to service, you can make money with BMAC, service your clients, and also make money on the side. So the seventh one, how does the tax consultant help a client with proper or adequate tax planning on each tax head at the beginning of the year? Should I read that again?
Okay.
How does the tax consultant help a client with proper or adequate tax planning on each tax head at the beginning of the year?
Yes. A consultant can do that in so many ways. Tax planning is about you looking at your cash flow and how best you can spread your liabilities, and even FRS that you are even paying to, even give that opportunity that you can spread your tax payments, but with a written request to them, they will allow it. So at the beginning of each year, if the tax liability is determined, you can take advantage. Don't forget, there are so many reliefs that you could use, in bringing down your tax liabilities. Once you have established it and the cash flow personally cannot carry the payments, you can spread it, but by seeking permission and telling them that this is your intention to pay, they will allow. But you have to do that alongside with the first payment of what you promised that you are going to pay. It will go with the request of allowing you to do that, and it will be allowed. So that can be determined from the beginning of the year as a result of cash flow issues. Look at the periods you have tax surplus, you have the surpluses that you can split the tax liability and on like that. And that is why taxes and assessment is based on preceding year basis. It's something that you have already determined, as your performance in the year that gone by, that you have to meet in the year that is coming. Thank you.
Thank you very much, sir. So I have the next question, the seventh question. This is the eighth question. If a company is making a yearly consistent loss, what is the tax rate applied?
Consistent loss. If the company, yes, if the company, I want to believe that it's a live company that has been in existence for more than 4 years. If such thing happen, FRA will subject that kind of company to what we call minimum tax of 0.5% of the gross turnover. So instead of you to be allowed to go scot-free, they say no. So minimum tax will be applicable on such companies that keep making persistent losses. And another issue is they might even call for tax audits, because why is this company making losses and yet it's still in business? Who is funding who? It then means maybe they have undeclared turnover, they have bolted expenses that eat up all their profits. So it's two ways. The first one is apply minimum tax payable of 0.5%, and subsequently calling for tax audit to actually explain the performance of the company during this period of loss making.
All right, thank you very much, guys. We have the next question. It said, after filing tax pro-max, do the FIRS still need to raise the additional assessment?
Yes, tax authorities, they have ample way of assessing business performances. Don't forget, through the BVN and your team, there's no way any tax-paying company can now run, because sometimes what you are declaring may not necessarily be what exactly happens, and they have access to all your inflows and outflows. Yes, even if you have declared X amount as your VAT payable, but if they have evidence and if they are so sure, they could raise additional assessment on it that you have under-declared the fact that is due to them, even after taking out your input from your output and vice versa. They can raise additional assessment if using tax code.
Okay, sir. Thank you, sir. And the last question here. After filing VAT at the end of the year, your revenue is now up to 25 million naira. How do you collect back your money already paid to FIRS?
Sorry. If such a situation happens, you may request and explain the situation, the scenario, with verifiable evidence. And if it is established that you actually, made this payment, it will be in store for you there as tax credit. So subsequent VAT payable will be set off against what you have, more or less overpaid during this month of during this period of your filing.
Okay. Thank you very much, sir. I would just like to bring up Yetunde Oyekomi to ask our questions. Just 2 minutes, please, so we can go on to the next thing. Are you there, Yetunde? I just give you access to speak. Okay, so while she's trying to, okay, Yetunde, are you there?
Yes, good evening, sirs.
Hi, good evening.
Yes, sir. Thank you for the opportunity. Okay, so some of the questions I wanted to ask have been answered from the chat, but I want to ask the BMAC accounting software. I know some accounting softwares have multi-user features where you just buy one license and you can have many users on that single license. So I want to know if it's possible. That is one. Two, I also want to know if it is possible that such software is installed in the office of the client, and because in the office of the client, and you are able to see those postings real time from your own office as a consultant. So because it's just like you have, like the other ladies said, bringing the source document to their office to do the posting. So it could be, could it be possible that the posting is done in the office of the client, while you at your own end is able to see what they are posting? So it helps the opportunity to have all the postings done simultaneously in different organizations, and you can have access to the to all the individual reports. So that's the second. You can answer that while I wait for while I get the next question.
All right. Thank you very much, Yusuf. I'm going to just let the consultants, our consultant in-house, to answer that question. The question of Femi there. She talked about multi-user, and she talked about the fact that if the system can access the system, when someone is posting in another place, you can see it in all and stuff like that. Can you just give a brief answer to that?
All right, thank you, Steve. Major, let me start with the first one. You talk about multi-user. Can I go on?
Definitely, go on, sir.
All right. Okay. Related to the multi-user, I will advise the consultant to advise their clients to get licenses for each of their clients. But there is what we call collaboration. So the accountant can have access to all their accounts. That's number one. Number two, you don't need to be going to your client office to get their books of record. As I was mentioning the other time, it's cloud-based. You have been collaborated. If they have either an accountant in-house, they can post their books and you will have access to what they have, what they are doing. They will just collaborate too. And if they don't have accountants in-house, they can make use of a module on that software. It doesn't require the knowledge of debit credits. They can pass information to you. But I can assure you, if you are any, we can have a demo with you, which will run you through how it works, and you can have a better knowledge of it.
Well, thank you very much, Femi. That was apt, and I hope yesterday. I hope you would. I hope this is satisfactory enough for you, and definitely we are going to reach out to you after this if you have more questions. We would answer all the questions, and I promise you a free demo on our application for you to see how it works and how everything is, so you can answer the questions further. Just for you, yesterday, just for you. Thank you very much. So I'm going to move on to the next on our agenda, which is an insight into BMAC, right? It's just a brief video that we're going to play, giving an introduction to BMAC and what exactly BMAC is. Wow, I can see that someone just, is this a question? Someone just dropped a question. Does 500,000 naira value of OC stated for acceptance certificates refer to cost per asset of total value TCA in the year? Mr. Jeremy, are you there, sir? Can you quickly answer this question before we play the BMAC video? Are you there, sir?
I'm there. Let me see the question again. Does 500,000 value of qualifying capital stated for acceptance refer to cost per asset of total value? It's cost per asset. It is the cost per each qualifying capital expenditure, because it is on each that you charge your depreciation, and it is on this particular same asset that capital allowance is being granted. So it is on the cost and not the total qualifying capital expenditure.
Okay, thank you very much, sir. So I'm going to play this video, just 5 minutes. We're done with the webinar, just to give a brief insight into a lot of questions that we have about BMAC.
Nigeria has over 40 million micro, small, and medium-sized businesses. Unfortunately, only a handful of these businesses ever grow to meet their full potential. One of the major reasons why this is the case is because SMEs hardly keep financial records. They have no idea how well or not they're doing. Are you a startup or an established business? Well, allow me introduce you to BMAC Apps and Services. Hi, my name is Sam Afemeke Jr. and I am the co-founder of Ikuba Technologies. At Ikuba, we have created a number of solutions specifically for business owners or managers that will help you keep better records of your financial transactions. First and foremost, we created the BMAC Accounting. The BMAC Accounting is a cloud-based accounting software that is easy to use. You can record your daily transactions using its notebook or post directly into the system. You can also collaborate with your accountants who can then go on to post these records into your various accounts. From there, you can generate your statement of comprehensive income, also known as a profit and loss account, showing profits or losses in a financial trading period. You can also generate your statement of financial position, also known as your balance sheet. You can also have a look at your debtors and creditors using the debtor and creditor listing, respectively. BMAC Accounting is great for startups, business owners, and managers who want to see where their business is at a certain point in time. I like to call it a kind of navigational system. There's also a dashboard where you can see how your business is faring at any point in time. We also created the BMAC Inventory Management Software, or the IMS, a cloud-based inventory management solution for merchants and vendors. The IMS allows you to track your inventory by capturing what you buy, the amounts you buy, the prices you bought them at, and what prices you sold them at, thereby giving you the ability to calculate your profits on a particular day or for a particular product category. The BMAC IMS also allows you to estimate or calculate how much waste may have occurred by virtue of expiry dates coming to pass. BMAC IMS Desktop. We also have the BMAC IMS Desktop, or the IMS Desktop as we like to call it. The desktop is just like the IMS Web, just that it is made for vendors and merchants who do not have internet coverage, as is the case in a lot of our indigenous markets here in Nigeria. The IMS Web and Desktop work hand in hand. When you enter records in the IMS Desktop, you can synchronize that information with your IMS Web. It's great for businesses as it helps them to keep better records and keep track of their inventory, whether they have internet connectivity or not. Then there is the BMAC Assistant, our mobile app. Now I love this app because it helps bring benefits of the BMAC Accounting and IMS all into one place. How? Very simple. We've basically taken the key information from both systems and we've replicated it all in one application. Now, this is great for entrepreneurs who are always on the go. You basically get your employees, your managers, or your shop assistants to use the BMAC Accounting or the BMAC IMS, and all that information synchronizes into the mobile app. With the assistant, you can view all your key business information on the go. We also built the BMAC Invoicing app. This is great for Instagram retailers, shop owners, and even freelancers.
Steve, please unmute yourself.
Yes, I said thank you everybody for dialing in to this session. The recording and the webinar slides will be sent to everybody that registered for this webinar. We appreciate your time and we do not take it for granted. We are going to drop our details
I'm going to George to drop his details. Is the business development manager in-house. You can answer questions that that you have, and you can also visit our website, bmacc.com, for any inquiry or information that you need pertaining to our solutions and our services. I want to appreciate Mr. Jeremy for this wonderful session. Thank you for for impacting us in this tax subject. Thank you very much, Femi, for being a wonderful moderator. Thank you for the team in-house. Thank you everybody that came on the call. Mr. Ikechuku, I see you. Thank you for those asked questions. Mrs. Yutunde, I do not take it for granted. Thank you for those. I see that you are dropping more questions. In fact, we are going to call you after this webinar, to answer most of these questions. And I also promised you a free webinar, so we are going to give you that. Thank you very much, everyone, for telling me. Our website is onebmac.com. You can reach us. Our representatives will drop the numbers where you can call and ask questions. So with this, I'm going to round off this session and say thank you and Merry Christmas and Happy New Year in advance. You can also follow our social media at BMAC HQ. We have loads of content that can help your businesses, and this is very important because our key objective is to help businesses grow and become profitable and sustainable. So thank you very much. My name is Kolade Stephen. I'm signing out of this webinar. Thank you very much.